These sessions are brought to you by the generous support of University of Minnesota Extension and Minnesota Soybean Research and Promotion Council and Minnesota Corn Research and Promotion Council. My name is Angie Peltier, and I'm a regional crops educator that works out of Crookston in Northwest Minnesota. And this morning, I'm very happy to have with us Dr. Frayne Olson. He is an extension economist, he's a grain marketing specialist, and he works for North Dakota State University. Dr. Olson, we'll turn it over to you. If you'd like to share your screen and begin presenting, we'll begin accumulating those questions for you.
All right, very good. Thank you, Angie. Okay, just double checking. You can see my presentation or my slide deck. Is that still working?
It looks great.
All right, fantastic. Well, good morning, everybody. I do appreciate the invitation to visit with you today. I'm going to go through kind of a higher level discussion of what's happening in the crop markets right now. I'll be focusing on corn, soybeans, and spring wheat. This is my contact information, so obviously we'd like to have a discussion or conversation today if possible. I'm going to go through my slides and we'll open it up for Q&A at the end. So be thinking about your questions. If there is something you want to visit about privately, or if you do want to, if you think about something later on, you'd like to visit about it, here's my contact information, my email, as well as my cell phone number, which is probably more reliable than my office number because I do a lot of traveling, and so the cell number is probably the most reliable. So let's just dive right in. Let me get my screen working. There we go. So this is, I usually start with the USDA forecasts, the USDA productions as the baseline, because that becomes kind of that reference point, that stake we put in the ground to say, well, if this is our starting point, what is changing from this point, plus or minus? Whether you agree with these numbers or not is kind of irrelevant, because there's just a lot of market traders and analysts, both domestically as well as internationally, that follow these numbers. So I'm not going to go through all of this today. I'm going to highlight just a few things, and again, trying to put things in context so everybody understands where we're coming from, and therefore what are some of the things as we move forward in time, as we look into the future, that might change some of these expectations or change our view of what might be coming next. So just very quickly, I'm going to repeat the same kind of process for soybeans as well as wheat. The tables will look very, very similar. You'll start to see the rhythm that I'm trying to use. So from a clock standpoint, I'll spend a little bit more time on corn just because I want to explain what all this information is. So just very quickly, the column on the far right-hand side in red is the most current information we have from USDA on both the production and proposed consumption or forecasted consumption for corn in the current marketing year. So this would be for the crop that we just got done harvesting. The column in the middle in blue is from last year's numbers, which are now finally closed out and officially locked in. And then the column in the green in the far left-hand side is from 2 years ago. We're going to use the green and the blue columns as kind of a reference points. But we're going to be focusing primarily on that column in red. Now, on Friday at 11 o'clock Central Time, USDA is going to release 4 major reports. And so from a data dump standpoint, this data dump we get in January is probably one of the biggest, because we have these 4 big reports. One of them will be an update for these numbers. So this comes from what's called the WASDE report. It's the World Agricultural Supply and Demand Estimates. USDA every month does forecasts for not only domestic, but also international production and consumption, and some forecast of trade. And they update that information every month as we get new information as things start to change and adapt. So on Friday, we'll get an update, the regular monthly update for the WASDE, the supply demand estimates. So the columns in the red hand column will change. We're not really expecting big adjustments. We're not expecting big changes in specific numbers, but cumulatively, if we start making enough changes and adjustments, what happens is our bottom line starts to adjust, and that's really what the market is looking for. The other report we're going to get is the annual production report. So this will be the final official numbers for production, for planted acreage, harvested acreage, and yields for the United States for the major crops, except for the small grains. For spring wheat and barley, they were done in September. But for all of the major other crops, corn, soybeans, sorghum, cotton, we're going to get the final official production numbers. So that those top two lines called planted and harvested acreage, as well as yield per acre, those will be finalized and locked in. They're going to cross-check survey data from farmers with FSA data, farm service data, when farmers register for the farm program, but also double check it with crop insurance, the RMA data. So we'll get the final, basically, this is how many bushels we have to work with. And right now, I don't expect those numbers to change a lot. I don't expect a lot of shock value in the production numbers. The other two pieces we're going to get will be the quarterly stocks report. So every quarter, every 3 months, USDA does a major survey of farmers as well as industry to say, how many bushels do you have in storage as of the beginning of, in this case, December? And then it's reported in January. So we use that as kind of a benchmark to say, well, how quickly are we burning through or using up the available supplies that we have? Because we're using that inventory number then to cross-check and validate some of our usage components or usage numbers. And for corn, that becomes really important, that report, those quarterly stocks reports, because that's effectively the only way that we can really measure feed consumption, the amount of whole corn that goes into the livestock sector. And I'll talk about that more in detail in just a moment. The final report that we will get is going to be for the winter wheat seedings report. And that kind of will start this debate and discussion about, well, how many acres do we need to plant in 2024? And what does that acreage perspective look like? So winter wheat seedings, obviously winter wheat, especially hard red winter wheat and soft red winter wheat in the south, need to be planted in the fall. We're going to get our first estimates of how many acres of wheat will be grown next year. So right now, today, the markets are still kind of in this holiday hangover, is what I like to call it, where during the holiday season, we tend to have very light trade. We don't have a lot of trading volume. A lot of people are taking vacation, not only domestically here in the US, but also internationally, because there are many countries, in particular China, that have some very large New Year's celebrations. And so they take some vacation time over the New Year's to be able to celebrate and have holiday. And as a result, trading volume, not only domestically, but also globally, starts to get a little bit light. Well, now coming into this week, we start picking up the volume of trade, and everybody's kind of getting prepared for these 4 big reports that will come out at Friday. So even though the prices have softened a bit, and I know there's a lot of farmers right now getting kind of concerned about softening corn prices, as well as some soybean and in particular some softening wheat prices, the question I'm getting is, so, is this a longer term trend, or is this something where we're trying to find a bottom in the marketplace? And I'm going to go through my logic, my explanation before I try and answer that question. So right now, today, the primary focus is not necessarily worried about the production numbers. We'll get the final official numbers on Friday. We don't expect them to be very large changes or adjustments from the numbers you see in the column in red. But we are really focused on the consumption piece. How quickly are we able to use up or burn through, if you will, our supplies? Okay, and what we're really going to be thinking about from a pricing standpoint and kind of a price movement standpoint is that very bottom row, the ending stocks numbers. So, and I'll talk about that in more detail, but in a few minutes. But as you can see, this year in 23-24, the combination of a record large corn crop, as well as relatively strong demand or usage consumption, we're going to have some increased carryover stocks, and that has some important implications for pricing and, again, price volatility. So let's just talk again, put things in perspective for you. The 4 big uses for corn, the things that we try to monitor, at least through the USDA reports. The blue line on top is feed. It's technically feed and residual, but let's just call it the feed pile. Again, this is whole corn that goes into the livestock sector. We're not talking about DDGs. We're not talking about corn silage. This is whole corn that's been run through a combine. Okay, the little dots on the far right-hand side represent the current USDA forecast, and then the solid blue lines going back historically show kind of the longer-term trends. The red line is ethanol, the amount of whole corn goes into the ethanol sector. The black line towards the bottom is exports, and then the green line is essentially everything else. Notice the green line is very, very stable. It doesn't bounce around a lot. So we're really going to talk about the big three, which is feed, ethanol, and exports. And I do want to focus then on those dots on the far right-hand side. That's the current USDA forecast for total consumption during the marketing year, not the calendar year, the marketing year. So we're only partway through that. So as we get more information, those numbers will adjust and tweak and go up or down based on the new information. So by far, our two largest uses of corn is number one, the feed, primarily livestock, not just beef, but also pork, poultry, dairy, and a little bit that goes into aquaculture. If you notice, that does stay relatively stable over time because it takes a while to adjust the herd size. And so animal numbers make a difference. And yes, we're seeing a contraction or reduction in the beef sector, the number of animals going to slaughter in the beef sector. But we're also seeing, to partially compensate, we're also seeing now an increase in slaughter weights, because that's typically what happens as prices start to rise. The number of animals coming through are fewer, but we start to put more pounds on for the animals that are slaughtered. Well, for those that are in the livestock sector, you know that conversion between the amount of pounds of feed versus pounds of gain, as the animal gets larger, starts to get smaller. That marginal increase starts to slow down. And so it takes more feed to get those last few pounds onto that animal. And that's one of the reasons that USDA is looking at a relatively stable feed usage, even though we're looking at cattle numbers dropping a little bit. On the ethanol side, we do have weekly updates from the Department of Energy on how much ethanol is produced every week, and therefore we can back calculate and try to make a pretty good estimate of how quickly are we using up corn and our corn supplies through the ethanol sector. So even those top two are by far our largest consumers of corn by volume. They tend to be relatively stable. The amount of corn that they use day to day or week to week or month to month really doesn't vary a lot. It's relatively stable. If you look down at the black line, which is the exports, that's where a lot of the volatility is. That's where a lot of the unknowns, the uncertainty is. So if we're going to have a shock in the marketplace, it will likely come from the export sector. So I am going to spend quite a bit of time talking about exports for wheat as well as soybeans and corn, because that plays a really big role in the pricing system, because we never know exactly when we'll get a new additional sale. We don't know who it's going to be to. We don't know what the volumes are going to be. Again, that has kind of this shock value. So very quickly, I just want to show where we are right now in our exports. How do we compare today's export levels to history? And I want to explain this table because it'll be repeated for soybeans and wheat. The four columns on the left-hand side are 12-month totals. So if you look at for example, the 22-23 column right here, and these countries are ranked based off of this column in this 22-23, that's the 12-month total. So how many, in this case, million metric ton have we exported out of the United States by country? And if we look back, these are the 12-month totals. And again, this is on a marketing year basis. So the marketing year for corn and soybeans starts on September 1 and runs to the end of August. Okay, these two columns on the far right-hand side are a little bit different. On the far right-hand side, this one that labeled 23-24 is year-to-date exports. So we start from September 1 through the end of the reporting period. Now, the most recent information, every Thursday, we get additional updates on this. They're always a little bit about a week behind. So this is from September 1 through the end of December. And we start looking at, well, who is buying U.S. corn and how much have we sold so far this marketing year? And then the column just to the left of that is also labeled 22-23, but that's the year-to-date number. So the first column, this 23-24 of annual exports, that's the 12-month total, and this is the 4-month total. Okay, so we've got how much have we sold this year versus this time, the same time period last year. So if you look at who buys, who are the big countries that buy corn from the United States, Mexico is our number one buyer. And you can see if you look over time, it's been relatively stable. We've had some highs and lows, depending upon kind of pricing as well as the size of the corn crop in Mexico. I want to jump down to Japan. because Japan is also relatively stable. They've been kind of up and down a little bit. Last year, their numbers were down a little bit because corn prices were so high, and they started buying a little bit more corn from Brazil. The one that really causes the uncertainty, the one that's a big buyer, but we never know what they're going to do, is China. And if you look at the volumes that we have of US corn that we sold to China, it does vary significantly. Okay, so that is kind of our swing vote. We have a lot of customers that come in and buy on a very nice, regular, continued basis. We can kind of count on certain volumes, but it's the Chinese market that is really that volatile one, and that's what we're paying a lot of attention to. So if we jump over to year-to-date totals, if we look at how much have we sold to Mexico this time versus today versus this time last year, the Mexican exports have been relatively strong. In fact, they're almost now have bought the same amount of corn they did the entire last marketing year. Part of the reason for that is Mexico did have a much smaller crop. Their domestic production was lower, and therefore they need to try and import more. However, when we look at Chinese demand, even though Chinese demand fell off significantly last year, it's even quieter so far this year. And I say so far because one of the reasons we're having a hard time getting U.S. corn into China is because of the large crop that Brazil had last year. And I'm going to talk a little bit about what's happening in Brazil and Argentina coming up for this coming year, because their crops are growing right now. However, in Japan, they are buying more U.S. corn. And again, part of that is a pricing thing where our prices today are a bit lower than they were last year, so they're increasing their volumes. So net, when we look at the very bottom line, we are ahead of last year. We're expected, at least right now, forecasted to have a better export season than we did last year, which is a good thing because we do have adequate supplies, and we're going to have to try and clean out some of these bins before harvest of next year. I do want to caution everybody, we do have some competition in the global market. Again, this is historical perspective. The green line on top is the United States exports of corn. The blue line is Brazilian exports of corn. The black line is Argentine exports. And then the gold line is Ukraine and, of course, Russia towards the bottom in gray. Now, those are the 5 largest exporters of corn in the world. Okay, so when we rank them based on export volume, the United States historically has been number 1. However, the last 2 years, Brazil has actually had larger crops, more exportable stocks, and has been very, very price competitive. And as a result, they have now taken over that number 1 slot. Now, I also want to point out just very quickly, look at what happened to corn exports out of Argentina last year, or actually the last several years, versus what the forecast is this year. Okay, so we're going to spend a lot of time and have been talking a lot about the weather problems going on in Brazil. We also have to think about what's happening in Argentina. The last 3 years, Argentina had 3 years of continuous drought. They had major, major, major production problems for both corn and soybeans because of a significant drought back-to-back years. Well, this year now, the weather patterns have shifted, and all of a sudden they're getting more rain. Right now, a lot of folks are forecasting some very, very good yield potential coming out of Argentina. So even though we are heavily focused on what's happening in Brazil, they're a larger export competitor from a volume standpoint, we can't ignore what's going on in Argentina either. So let's talk very quickly. I know this is going to take a little bit of time, but it's really important from a pricing standpoint to understand what's happening in Brazil. So the Brazilian corn crop is a little bit different. They actually have 2 corn crops. There's what's called the first crop corn on the left-hand side, and this is a map of where the corn is produced. And then the second crop corn, also called the safrinha crop, so second safrinha, is on the right-hand side. And notice the production zones are a bit different, and also the timing of planting and harvesting are very different. So the first crop corn on the left-hand side tends to be produced in the south. That would be they're planting and harvesting corn and soybeans at the same time, very similar to what we do here in North Dakota and Minnesota, as well as in Iowa and Nebraska and the rest of the United States. So they're planting and harvesting corn and soybeans at the same time. That's the left-hand side. So that crop now has been planted. It's growing right now. We can look at the weather conditions, get an idea of what yield and yield potential might be. However, you look at the right-hand side, and that's the safrinha crop, or the second crop corn. That isn't planted. Notice that's primarily grown in Mato Grosso and Goiás, which are the 2 northern growing regions, very, very large growing areas. That corn crop is not going to be planted until after the soybeans have been harvested. So the soybean harvest in Mato Grosso is just barely starting. It's less than 1% has been harvested right now. So it's just kind of getting rolling. And as soon as they start harvesting those soybeans, then typically they will come back and replant right behind, will replant corn. Okay, so the crop condition and the soil moisture conditions for the soybean crop can spill over or start impacting that second crop corn. And the reason that's significant or important is because about 25%, give or take, of the total bushels of corn produced in Brazil is first crop corn. So even though a lot of that corn is exportable stocks, it's growing very close to the export terminals, it's only about 25% of the total volume. About 75% of the total volume is that second crop corn. So that hasn't even been planted yet. And the question or issue is, well, if it continues to be hot and dry in the north, will that have an impact on the number of acres of second crop corn or safrinha crop corn that's planted? So we're going to have to wait to see and listen to what's happening. So right now, the corn market is kind of passively watching what's happening in South America, but they're going to get very actively engaged now as we get into January and first part of February, as the soybeans in Mato Grosso and Goiás are harvested, and we start thinking about planting that second crop corn. So I did include just a crop calendar to give you an idea of when typical planting and typical harvest are. If you notice towards the top here, we have corn first crop and corn second crop. So planting for first crop has already taken place. Harvest will start now kind of in the beginning to middle part of February for first crop corn in the south. But notice, when is the planting and harvesting for the second crop corn? Planting will occur in the north, a different region, coming up now in the first part of January as the soybeans are harvested. So what's going on with Brazilian weather? Because this will have an impact not only on corn, but also soybeans. So I'm going to talk a little bit about both of them simultaneously here. Now, this is a map. This is generated by USDA. Actually, it's a joint venture between USDA and NASA. They're using satellite imagery and a bunch of remote sensing to try and estimate what is the drought severity. So this would be similar to, but not identical to, the drought monitor maps we have here in the United States. Now, notice what's going on in the north. If I were to show you this map from about 2 or 3 weeks ago, this northern region up here of Mato Grosso and Goiás, that region where there's a lot of corn and soybeans growing now, corn eventually, was very, very dry. So over the Christmas and New Year's holidays, that region received a significant amount of rain. So even though there has already been some crop damage in the north to the soybeans, the corn has been impacted because it's not been planted. So we've seen some yield reductions. We already know that there's been some drought damage in the north. However, that damage now has been stabilized. They've gotten some rain showers, even though it's still relatively hot. Daytime temperatures are still in the 90s or near 100. It's still very, very hot. At least they've gotten some rain showers to at least stabilize their yield and yield potential. When we get into the south, if I were to show you this from a couple of weeks ago, this would have been very blue, it'd be very wet. So this is the region last year that had a lot of drought. They're beginning very consistent rain showers. They've been able to recharge some of their soil moisture conditions. Now they're starting to dry out a little bit, which is actually good from a production standpoint for yield and yield potential. And that now in the south is really impacting both soybeans as well as corn and corn yield potential. So kind of a mixed bag. Brazil is a very large country, has geography about the same size as the United States, give or take a little bit. And so there's a lot of miles from the north to the south. When we shift to Argentina, it's a smaller country. Their production region is much more concentrated. And so this is where they grow corn. Again, the darker the region, the more corn in bushels or tons is produced. This is going to be very similar to the soybean growing region. So the corn and soybeans, just like here in North Dakota and Minnesota, are grown in the same areas at the same time. Here's the crop production cycle. So if you look at corn production, it's already been planted. It should be harvested a little bit later, probably into that March and April time period through our growing season. So their corn and their availability to export corn and compete directly with us is usually during our summer months. When we look at soil moisture conditions, Again, relatively stable right now. Again, as of a couple of weeks ago, this area of the core growing region still was behind in moisture, but because of the recent rain showers, they have been able to stabilize, and it looks as though they're going to have actually a relatively good growing season. Both corn and soybean production levels are expected to increase from last year pretty substantially. So they're going to have much more of a normal year with normal exportable stocks. So let's get to the bottom line. What does all this mean for corn and soybean prices? And I'm going to talk about corn specifically because the corn story and the soybean story are a little bit different. Now, this is the kind of a graphic of U.S. production, consumption, and ending stocks. So the green line on top is U.S. production of corn. The red line or maroon line is U.S. consumption of corn. Again, the little dots on the far right-hand side of the current estimates. I want to focus on the blue bars on the bottom. So those blue bars represent the stocks to use ratio. So it's a percentage. It's scaled on the right-hand side of this graphic. So what we're doing is we're taking the ending stocks. How much grain are we going to have in the bin just before harvest of next year? And we divide it by our total usage or total consumption. So what percent of our total needs are we going to have in inventory in case there's a problem? Now, the reason that's important for pricing is it impacts two things. It impacts the kind of the base price as well as price volatility. So think about it this way. If the blue bars are really big, they're really tall, it means that we have a lot of inventory. The bins are full coming into harvest. So if you have a lot of inventory, or we're expected to have a lot of inventory, the mentality, the psychology of the market is, well, we've got this big inventory, average prices will be low, and prices will be relatively stable. Because if we get a shock or something new, something changes, it's like, well, okay, we get more exports than we expected, or we're looking at a smaller crop than we expected. No big deal because we have all this inventory left over as a buffer. Okay. On the flip side, if those bars are relatively small, if they're very short, it means we have very few inventory. The bins are almost empty coming into harvest. If that happens, we tend to have very high prices or higher prices. We also tend to have a lot of price volatility. Prices bounce around a lot because any new piece of news has a bigger impact. Because essentially, if we're coming in on fumes and it looks like the crop and prices are already high and it looks like your crop is going to be smaller than we expect, now all of a sudden we really got to crank higher on prices to get people to change their habits. On the flip side, if they're really high and it looks like we're going to have a bigger crop than we expect, all of a sudden prices drop pretty significantly because we don't have to ration or tighten up that supply chain and keep the prices high to change behavior as much. So what I'm looking at then is let's compare very quickly the price in the futures market relative to these blue bars. And I want you to focus on these two time periods between, for example, 2011 through about 2014 versus this 2016 through the 2020 time period. Okay, so if we do that, I'm going to go forward. So here's the futures market prices. And again, this is as of last night, going back to 1990. So it's the same time period as this graphic. Now, these have not been adjusted for inflation. So the prices you see in 1996 are $1996. So adjusting for inflation is a real big pain in the rear. So I don't usually do it. But just to show you what happens to average prices and price volatility. So let me go back. In time periods when we have very low inventories, like in this 2010 to 2014 time period, or coming into this 21 through about 21, 22, 23 time period, we see relatively high prices with a lot of price bouncing around, a lot of price volatility. Okay, versus when we have big inventories, what do we tend to see? Relatively low prices with more price stability. And what I'm trying to get you to think about is right now, this red bar is the current forecast from USDA for the current marketing year. So my question is, how does this red bar compare to history? And I think we're seeing now that we're looking at this transition. We're potentially transitioning from a time period when we had very tight supplies into one where we have very comfortable supplies. So the bins are not going to be empty by the time we hit harvest next year unless we have something really, really big changing. So what does that mean for prices? And what does that mean for price volatility? What does that mean for your marketing plans. So let's zoom in. This is for March corn futures. I'm going to do the same thing for soybeans and wheat. March corn futures, this would be the futures contract that the elevators and ethanol plants are using to price corn today. So if you deliver corn today, they're going to use this futures contract that is subtract off the basis, and that will be the price that you receive. So the black bars, the black lines that go up and down is the futures market prices. And I'm just using that because of the large area of people that are participating in this webinar right now. And your local basis levels can be pretty significantly different depending upon where you live. The blue bars, the blue lines, let's just ignore for right now. So what we've seen is over this Christmas holiday time period, we had a pretty tight, pretty decent trading range here going on. And then all of a sudden we broke through that and fell lower. And that's what farmers are getting a little bit anxious about right now. There's a lot of nervousness in the marketplace, but there's three real reasons why that has happened. And why I think as we move forward, that attitude, the viewpoints might be shifting. So first, we had, as I mentioned earlier, very light trading volume. There weren't a lot of buyers and sellers over the holiday period. So any new piece of news could have a kind of a larger impact on prices. Number one. Number two, northern Brazil, which was dry, got those rain showers. And so again, the yield expectations, the kind of that premium that had been built in the market for uncertainty about the Brazilian crop was starting to erode. And of course, the path of least resistance for prices is usually lower if we're looking at a stabilizing yield. And then the third piece was that we do have some investor types that come into the futures market. And when they look at investing in agricultural commodities, using ag commodities as an part of their investment portfolio, they really look at commodities as a whole. So they're thinking about ag as well as other natural resources like crude oil. So when they think about what's going on, they're looking at increasing or decreasing their investment in commodities, where ag is a small piece and energy is a large piece, relative to other investments like stocks or bonds or mutual funds. And so as they start to increase or decrease their positions in the commodities, including crude oil, they automatically adjust their positions within the corn and soybean and wheat futures. Well, over the holiday break, the crude oil prices started to soften. And as a result, the investing community was pulling some money they were selling their positions in the futures markets, both crude oil as well as grains, and reinvesting those into other areas. And so right now they're very short, meaning there was a lot of selling activity going on, not much buying activity going on. When you have more sellers and you have buyers, prices start to fall. So why do I think this might be changing? And I'm kind of knock on wood. I hope that we're putting in these new kind of contract lows that we're looking at today. The reason is on Friday, we're going to get all of those reports that usually hits the reset button on kind of people's attitudes and perspective about the future. We're starting to get those positions, those net short positions by the investment community will likely be offset somewhat as we move forward in time. And I think we're going to start to see, given these lower price levels, some increase in exports and export volume. So I do think we're going to be able to sell more U.S. corn into the international market, because the international buyers will come in and say, oh, this is a real pricing opportunity. I think I'm going to purchase some of my needs in advance. So even though I might not need them for several months, I'm going to purchase them at today's price. So one of the things that I'm watching very, very closely now in the next several weeks is, what are we going to have for export sales, number one, and more importantly, are we going to start selling more corn into China? And if we start to pick up some Chinese export sales, I do think, in my opinion, that will be enough of a spark to say, okay, we have now reached the lows. We know where the pricing points are, and when the Chinese will likely come in and buy some more. And those increasing volumes of export sales will likely be when we see the bottom put in. And that's what those blue lines are really representing, are those kind of psychological barriers for both prices going up and prices going down as we move forward in time. So for the sake of time, I want to make sure that I go through the rest of the commodities and make sure that we have time for Q&A. So let's move on to soybeans. You'll see that the process is relatively the same as what I talked about with corn. This is the supply and demand table, the inflow and outflow of grain for soybeans. So the top half of the table talks about the inflow of soybeans. The bottom half is the consumption or usage of soybeans. If we look at that bottom line, though, at the ending stocks numbers in the very bottom row, we start to see, that ending stocks number for soybeans is still relatively tight. And that's what the big difference is between corn and soybeans right now. Corn, we're starting to build some inventories. On the soybean side, we're relatively tight on our ending stocks, at least the forecast. And again, on Friday, we'll get some more updates on both the production and potential consumption of soybeans as we move forward. So how do we consume soybeans? Again, right now, short term, for the next couple of months, we're going to be really focused on what about export sales? What about domestic consumption or domestic crush? What does that mean for pricing and price analysis? So the blue line on top is the amount of whole soybeans that go into the crushing industry. Again, the dots on the far right-hand side are the current forecast from USDA. The red line is the exports number. Now, usually when I make my presentations, I point out the crushing number and then we jump right into exports. However, given the growth and expansion of export of crushing, soybean crushing in the Northern Plains, it's not just North Dakota, but also South Dakota is seeing some additional plant expansions. This is becoming a bigger deal. A lot of that's been driven by renewable diesel. I don't have time to talk about renewable diesel in great detail, but we can certainly cover that in Q&A if you wish. My point, if you look at what is the kind of the growth rate that we've seen in that blue line, over the last about 10 years, we've seen this nice steady increase in the amount of crushing capacity. And again, just like an ethanol plant or just like the feed sector in corn, this crushing demand is relatively stable. So the amount of soybeans that are crushed every day, every week, every month is relatively stable. We can forecast forward and have a pretty good idea of the volumes that are required. Now, obviously, pricing makes a difference, and I get that, but we're right now really concerned about volumes. And at what price level do we have to be able to make sure that we have this balance between the amount of grain flowing into the supply chain versus the amount being taken out of the supply chain? So I am going to focus on export specifically because, again, that has the shock value. If you have more questions about kind of renewable diesel and the expansion of crush capacity, we will certainly talk about that during Q&A. So notice, and here's my challenge, when you look at the export number, the red line, for the last several years, we've seen a pretty steady downward trend in exports and export volume. And that is a little bit concerning because it is such a large number. Now, when we look at who do we export to, it's same table as what we saw with corn. 4 columns on the left-hand side are 12-month totals. 2 columns on the right-hand side are year-to-date totals. Not a big shock or surprise to anybody that China is by far our #1 customer. Mexico is going to come up pretty often here. Mexico is our #2 buyer. And we get to Japan and Germany, as well as a few other European countries like Spain and Netherlands. So we actually export, by the time you add everything up, we do export a relatively significant amount of soybean into the European market, but nothing is nearly as large as what we see into the Chinese market. So if we shift to the far right-hand side, those 2 columns, if you look at our export sales to China so far, relative to what we normally see this time of year, we're well behind. And that's one of the reasons that we're looking at this slower export pace. We're looking at actually softer prices right now than I think we had expected earlier on during the growing season. And the main reason for that is that Brazil had such a massive, an incredibly large soybean crop last year that they really are relying on the export market, and in particular into China, as that ability to get rid of their excess supplies. Because they had such large production, their domestic crush industry is not nearly as large as it is here in the United States, so they're much more dependent upon the export market. So what it really means is the Brazilians were able to capture that export market for a longer time period. So this graphic shows week by week how much soybean do we sell into the global markets. And it's by marketing year, so we start on September 1. Notice the red line. The red line is this year's numbers. So if you take a step back and you think about, well, when do we export soybeans? Most of our exports are from about the beginning of harvest through about the end of January. That's our peak time period. And the reason that's so critical is that's the time period when Brazil has a difficult time exporting soybeans. So once Brazil starts to kind of run out of last year's soybeans, the world, in particular China, starts shifting to US supplies because it's coming into our harvest. We've got lots of volumes to be able to ship. We both sell and ship a lot of soybeans. But by the time we get into January, when Brazil starts their harvest and their soybeans start to hit the global market again, then we start having a much harder time competing with the Brazilian market. So what's happened, because their crop was so large, Brazil was able to export longer into our window, which means our window for export actually got shorter. So the question I sometimes get is, well, we lost it on the front end, but can we make it up on the back end? Is it possible for the United States to extend their export season and sell more later on? And I guess depending upon how the Brazilian crop goes in their harvest cycle, I'm questioning that. I mean, there's some problems showing up in Brazil, but the production problems are not great enough, in my opinion, to be able to give us a longer export window, unless there's something else that happens that's unforeseen at this point. So I agree with USDA's forecast on export volumes. I think we're going to struggle a little bit with the export market simply because of the large volumes that they had out of Brazil. I'm going to skip over this just for sake of time. This is where Brazil produces soybeans. Again, the darker the green, the more soybeans are produced. Yes, they only have one crop of soybeans, fortunately. It's all planted and harvested within a few months of each other. So the north, they start planting and harvesting in the north, and they work their way south. So again, as I mentioned before, harvest is just beginning in the north in the Mato Grosso region, and it will slowly work its way south as the season continues. This is the planting and harvesting cycle. We've already seen that before. I've already talked a little bit about the drought severity. And again, because there were these rain showers that came on over the last several weeks, it's improved the kind of the health of the crop right now. It looks like yields are starting to stabilize. We've taken some of that risk premium that we had built into the soybean market out of that marketplace. Thus, we're seeing some softening in prices. I do want to show this just because it is one other way to try and track kind of the plant health. This is also from USDA, the Crop Explorer. This is the NDVI. So this is vegetative health. This is updated about once a week. It's always a delay because of the time it takes to compile the data. But what we're looking at here is vegetative health. So they're taking a satellite imagery of how green is the crop, and they're comparing the greenness of the crop for this week compared to what we would normally see this time of year for that same week during the production period. So USDA and NASA has been doing this for a little over 20 years. So they have a really nice data history. So they can compare what does a crop look like today relative to what we would normally see at this time of the year. So notice, again, it helps us ID how, if there is a weather problem or crop production problem, how big is that problem? How large an area is being covered? So the green basically means it is healthier than we would normally see this time of year. And if it's brown, it's not as healthy as we would typically see. So it's this eastern region of Mato Grosso, the western region of Goiás, that is kind of the problem area. There's a lot of soybeans produced there. You can see that that's the area that's had the most severe drought. So yes, there's some production problems going on in the north. There's going to be some yield drag. We already know that. But please look and recognize that in the south, that crop, even though it's younger, it's not as mature, it's in much better condition. And that's basically because of the rains they had gotten earlier. When we look at Argentina, again, I've talked about this before, their corn and soybean production region is essentially on top of each other. Here's the crop production cycle. I'll put that up so you can look at it in the recording. Here's the rainfall or soil moisture ratings, but we talked about that during corn. But let's look at the vegetative health. Now, I do want to caution, right now today, at least during the time period, this is just before Christmas, most of the Argentine crop was still being planted. And so we got to recognize that The NDVI, or this vegetative health, is for kind of all cropland and pasture land area. So it really doesn't do a good job of reflecting the health of the corn and the soybean crop right now, but it does give you an idea that at least the core growing region for some of the other crops as well as pasture land is looking better than it was this time last year. Last year, they were in really, really tough shape. So let's look at our blue bars on the bottom. And if we look at when we have large inventories versus very tight inventories, you see this similar pattern. If we have very tight inventories, we tend to have very high price levels with a lot of volatility. If we have bigger inventories, we tend to have lower average prices with less volatility. And again, when we come back to here and look at the red bar, which is the current USDA forecast for ending stocks, we're still kind of in this tighter range. So even though we've seen a drop or a decrease in prices over the last couple of weeks, we're still in this higher level of the price spectrum when you look longer term historically. So what's going on? If we look at what's going on in the March contract, again, if you're delivering soybeans today, this is the price that you would receive less the basis. And I took this as of about 7 or 7:30 last night. Notice that even for March soybeans, we had a pretty dramatic drop coming into the first part of June. And that was really that crop acreage report that came out in June that caused this price recovery. We had a bigger shift into corn, an increase in corn plantings and a decrease in soybean plantings than we expected. And because of the lower planted acreage, our lower production levels, even though our exports are going to be relatively small compared to history, our production levels are also down. So the last couple of weeks, we started to take some money back out of the soybean sector. And a lot of that is because now the yields and the production expectations coming out of both Brazil and Argentina are starting to stabilize because that weather patterns have started to shift. Now, the harvest is not in the bin yet, and so we still have some harvest and growing season left in both Brazil and Argentina. The markets are going to be focused very, very heavily on that. If there continues to be some problems in Brazil, primarily, but also potentially in Argentina, my guess is right now, the reason that China is not buying more U.S. soybeans is they're waiting for this large crop to come out of Brazil and Argentina again. So they're buying as much as what they need to from the United States to kind of fill that time gap, and then they'll switch back to South America. Now, the point is, if there is some continued problems in South America, either Brazil, which is probably the more important of the two, or Argentina, they will likely, the Chinese as well as other buyers will likely come into the U.S. market and buy additional beans to try and cover their positions in case there's additional losses in South America. So the yields and the yield potential coming out of Brazil in particular, but also Argentina, will impact both old crop and new crop soybeans. So I just want to make sure that I point that out. And I'm going to make a couple comments about wheat, and then we better get to Q&A because I've already taken too much time. I'm sorry. So on the wheat side, if you look at the bottom line inventories for wheat and ending stocks, we're still pretty comfortable in all wheat. Now, this is all wheat classes blended together. I'll get to spring wheat in just a moment. Here's our big challenge in wheat. The blue line is domestic milling, again, relatively stable. The export market is the red line, which is very volatile. My concern is we are starting to lose our competitive advantage in the global market, primarily because the Black Sea, in particular Russia, has had very large crops over the last several years. They have not had the shipping problems that the Ukraine has had, so they're still very competitive with us. Agricultural products are not part of the economic sanctions that the world, US as well as Europe and other parts of the world, had put against China, against Russia. So ag products like wheat and corn and fertilizer have not been impacted. The Russians are still producing and exporting a lot of wheat, and they've been very, very competitive, and they're starting to take some of our market share away, especially in the winter wheat area or the winter wheat classes. When we look at total exports, you have probably heard about some Chinese exports, wheat exports into the Chinese market. Almost all of that has been soft red winter wheat, not hard red winter from Kansas, but soft red winter from Missouri and Ohio and Illinois. Okay, it's not spring wheat. When we look specifically at spring wheat, our inventories of spring wheat are still what I would consider adequate. They're not excessive, but they're certainly not on the tight end or the tight side. When we look at, again, our exports and domestic use, we are having a little bit better export year for spring wheat. If we look at our total export sales, this time today versus this time last year, it's up a little bit. Most of that is because of spring wheat export sales to Mexico. So Philippines, again, big buyer, very stable. They have come back into the U.S. market in a big way. You know, we're more price competitive than we have been in the past. Mexico has really been the surprise. Nice steady growth in export sales into Mexico. This year, they've been bigger buyers. Our prices are a little bit lower. They're more attractive in the global market. Before we get too cocky and think about, well, yeah, wheat is going to do really well, we do have to think about what's going on in Canada. So the green bars are U.S. production of spring wheat. The gold bars are Canadian production of spring wheat. So the Canadians did not have as many bushels produced, but their quality was very good. And that's similar to the U.S. crop. The bushels are down, but the quality is very good. And so the quality profile is helping compensate for the lower bushels. From a pricing standpoint, the spring wheat market is struggling a little bit. It's been kind of correlated and pulled down a bit by what's happening in corn. The big question I have in my mind is, are we going to continue to have this nice steady export pace for spring wheat? I do think, and I know that I'm kind of an odd duck in this world, but I do think the Chinese will come in and buy some spring wheat from the U.S. as well as from Canada. And so both of that export volume, I think, will help. The Canadians have had a kind of a tougher year in their export sales this year, which is also kind of putting a little bit of a drag on the spring wheat market. So with that, I will stop my presentation. I will try and answer as many questions as I can, given the time that we have remaining. So let me stop sharing here and try and get to those questions.
Great. Thank you. Thank you, Frayne. So we do have several questions. So in the Q&A here,
Yep.
So is there something, so people ask, is there something special with corn imports with corn where where you have billions of bushels carry over?
So no, most of the carryover, the fact that we'll have more grain in the bin at harvest is because we had a record corn crop this year. So our total corn production, we had an increase in acreage. We had a very, very high acreage year this year. And our corn yields were very close to average when you look at the national numbers. So you take typical yields with bigger planted acreage, and we have more bushels. So this is really a supply issue, not necessarily a demand issue. So it's not because we're importing more corn, it's we simply produced a lot more corn and we're going to have more corn in inventory.
Okay. Speaking of demand, there was a while there where we were hearing a lot of information about the Mexican government and their stance regarding GMO corn. Affecting our markets. And so has that died down? Has that been resolved? What are we hearing about that?
So really good question. The current Mexican president, and this was my assessment really politically, he wanted to try and limit or eliminate, if possible, U.S. corn imports. He was trying to basically cater to his rural base. Okay. Now, President Obrador, who's the current president, his term limit has been reached. He will not be running for re-election. Mexico is going to have a presidential election in July of this year. There are two new candidates running. The one that's currently leading is very pro-agriculture and pro-trade. And so we do think the current expectation politically is that when they have their election, regardless of who's elected, a lot of these issues on GMO corn and the importation of U.S. corn and the use of glyphosate within Mexico will probably die away. It's not going to be as big a political issue as it was the last, let's say, 18 to 24 months. So it's not done yet, but the expectation in the marketplace is that that will smooth itself out.
Okay. So similar to how DDGs are an important factor in penciling out ethanol production, making that work and keeping ethanol plants in the black. I know a lot has been said about in the ag press about crush capacity and how that's increased over time, and how there's questions you often hear it bandied about that maybe there's a question of being able to even meet crush demand. But you've talked about kind of the stickiness in livestock numbers over time. How is that all interconnected, and do we have the feeding capacity that we need to demand that that real demand at the crush facilities?
Sure. And so just to kind of recap, so yeah, we have DDGs, which is a co-product for ethanol production. And we also have the soybean meal. So when you're crushing soybeans, you have two main products: the oil, which is really now the increase in demand has been for using the oil as a feedstock for renewable diesel. And that's been driving a lot of the increase in crush capacity, is to meet the oil demand. But of course, you also have the meal portion of it, which again, typically goes into the livestock sector as a feed supplement. And there is some substitutability from a ration standpoint, depending upon the species, between DDGs and soybean meal, because they are higher energy and work well within a ration. So the moral is, no, we don't have the livestock feeding capacity to chew up all of the extra soybean meal. We are going to have to look to the export market, the international market, to be able to absorb the additional DDGs that are going to be produced, or not DDGs, but soybean meal produced. But there is a very large demand base for that. In my opinion, and my analysis of the soybean meal market, the international market is big enough, deep enough, and large enough. It will be able to absorb that. We do have to be concerned about the supply chains, though, because to be able to ship and export a powder like a DDG or like a soybean meal is different, very different from exporting a grain. Okay, because of the flow rates and the stickiness and just kind of how do you try and make sure the moisture doesn't cause a lot of caking. So there are some logistical challenges in dealing with a powder like a soybean meal or a DDG that we don't face with a grain like a soybean or a wheat or a corn. And so there is going to have to be some investment in adjusting our capacity and our logistical system, both transportation and storage, to be able to make that happen. So it's going to take some money, but there is a demand base, and I'm very confident we'll be able to sell it.
And you're confident as well that we'll be able to overcome those logistical hurdles as well.
Yep. So there's from a rail standpoint, to be able to ship like a shuttle train, the rail capacity is there. We can do that. You can just use the same cars for grain as you do for a soybean meal. The difference comes at the export terminal itself. So when you unload that and you start conveying it, moving within the export terminal, the spouts are designed at an angle to handle grain, which rolls. Well, the powder sticks, and so you need to have a little steeper angle to get the powder to flow. And you also have to, it doesn't work as well in an auger, so you have to have more conveyor systems. So there's going to have to be some money spent to kind of adjust or retrofit some of our export facilities to be able to handle the powder instead of handling a grain. And there's already movements by some of the major grain companies to make those investments, because they also can see what's happening and are trying to take advantage of the additional supplies. So again, some of that's going on behind the scenes. We already have some capacity through the PNW to be able to handle DDGs, but that capacity will increase because there's some plans in place to be able to cover that.
Okay. Well, thank you. This is just such a fascinating topic. Constantly changing, always something else to learn. And we appreciate you spending your morning here with us today, all of the information you presented and your willingness to answer questions. And so thank you, Dr. Olson, for being with us here today.
No, I appreciate the invitation. And again, please, reach out if there's any more questions. So thank you very much, Angie.
Great.